Good morning, everybody. Welcome to the state of the market, the state of our market. And we'll see how it relates to the state of your market and your portfolio and how you're thinking of things. Big tape today. We have 4 stories on our desk today, and they're all kind of connected by one thing. And we're getting some amazing reveals happening from IBM today, in my opinion. Bottlenecks. Story number 1, though, June CPI landing this morning cooler than anybody modeled. So nice big drop there. That's really good. Consumers getting a break at the pump. So inflation is really kind of a tale of a couple of stories here. I want to bring Tim in to talk about all this stuff in a moment. But really, there is the real world inflation of, what do we deal with food and energy and things like that. And we have seen a little bit of a pullback in inflation as it relates to, filling up your car, which is great on the consumer side of things. But we're also seeing sticky inflation overall in other areas. And part of that is part of the build out, right? So there's sort of almost 2 worlds. You've got this AI build out that is demanding many things. And IBM kind of suggested, just as another little piece of evidence that we keep kind of, that's sometimes trading and investing, you're just kind of continuing to add those layers of evidence to a thesis as it either gets developed or you're looking for support for it. And you can see that they're suggesting, people are shifting their spend into areas that they had absolutely not expected. They're bringing in those chips. They're spending money on servers. Remember my Dell idea? Almost hitting all-time highs today. They're spending in other areas, and that kind of hurt their results and kind of throws us for a loop. So remember, it's a world of bottlenecks now, and that's going to affect companies that have the right plan. But guess what? If you have forces that are much bigger than you, or you can't acquire the inputs that you need, that's a problem, right? And so this is really part of the ultimate age of disruption. Number 2 is going to be a little bit deeper on the IBM there, down worst day in 40 years, perhaps, down 20% pre-market. We saw this, I think it's actually down even a little bit more. What is that? $70 this morning. So that is massive. That's more than 20%. And people are moving into those things. So we'll talk about that in a moment. Story 3, Korea semi crash, right? So this shouldn't be a surprise to anybody. Tim and I have been talking about this for a couple of weeks. This is FOMO on top of FOMO. It is leverage. It is all these things. So we're going to get into that stuff. I talk a little bit about oil. And Tim, I want to bring you in. Let's talk about what is going on. You've been talking about the dollar here, right? You've been talking about the dollar, and I want you to relate what's happening from the inflation numbers, maybe even IBM, but maybe not. But what are you thinking on your dollar sort of idea here? Tim, I think you're muted. You might be muted, buddy.
Sorry.
There we go.
I was. Just sometimes we get Andrew typing in the background, and I think I'm also guilty as well. Yeah, it's good. Good morning. So, CPI came in, quite a bit softer than everybody was expecting. I think, you see oil prices, they got back down to below $70. That's the big driver of the CPI number. But I think I talked about it yesterday in the ticker highlight show. That was my pick for the one to leave. We picked stocks, ones you love, ones you want to leave. And I looked at the dollar index and I looked at market positions, and the CTAs, or the hedge funds, they trade currencies a lot because they take on a lot of leverage, and that becomes, a core asset of what they get to trade. You have 6 asset classes, between stocks and bonds and commodities, the different commodity spaces. You can have metals and you can have agriculture. The dollar index is a very tradable product. You can leverage that sucker like 100 to 1. I mean, it's doesn't move much on a percentage basis. Big move in the euro is 0.5%. That's kind of a big move. But my point there was the positioning is very long the dollar. So they're short all the other stuff. They're long the dollar on the idea that Warsh is coming in. He's a hawk. He's going to fight inflation, and they're going to raise rates. However, when the market is super long the dollar and they're super long one position, we talked about this with the whole switch in semiconductors. When the market is really one-sided, it's priced to perfection. there's not a lot of upside from there because there's no buyers left. And so the idea that I had was, all right, this is not something you want to be long. You want to actually look for a turn here. And so the big reaction we're seeing today out of the markets is, and the one that's sustaining more than anything, is the dollar move. So I know we don't have a lot to trade that here in Option Pit. They do have some ETFs that trade the Japan currency and all that. So I don't go too much on it, but UUP is the one that I recommend you leave. But the dollar index, to me, is a positioning story as much as anything. This is the first chink you had in sort of a really strong set of data, and it's a big one. I mean, there's a big swing and a miss on CPI for the analysts, but we see, pre-market, you saw a spike in the S&P futures. They went from about 7560 to over to 7600 in one bar. And that's twofolded on that. We had, at that same time, I was on our traders meeting, and I see the data roll through at 6:30, but alongside it was comments from Warsh, and I saw that, and I saw all the market spike, and I thought, I can't move on Warsh, but now that's CPI. So CPI was the big move, the big miss. But you had kind of a bifurcation. So you had Warsh with very hawkish comments. So he was saying, we are not going to, we have no tolerance whatsoever for inflation. And he said, if we get it right, we will get it right. We're going to do the things we need to do that this sort of inflation, kind of pressures we've seen in the last 5 years, that is going to be a thing in the past. So he has no tolerance for this. Yeah.
Well, this is interesting, right, Tim, because we've seen, I don't know what you think of this, but this is something that I saw the other day, and record high global demand for U.S. equities. So big inflows. Of course, we talked about how, America, everybody was worried they were going to get displaced on the AI side of things back around DeepSeek. The idea that U.S. excellence was about to crack. Well, guess what? They got out for like a month, and then they started piling back into U.S. AI assets because they're the best in the world, right? Maybe not in robotics and automation, some of those areas, but certainly, the U.S. is big in the models, in many of the other areas that have made sense. So we have this big push in here. And so I wonder, as part of we'll talk about Korea in a moment, but all this FOMO, all this unwinding that's probably going on right now, which is why I've actually shorted into this rally, shorted some semiconductors, some of the photonics names, because I think there's a little bit more unwind to go. And I think the risk in this trade, I don't know if you would agree, but the risk in this particular trade is, what if some of the things that we've been talking about, meaning what if somebody comes out and says, well, maybe we're going to dial back the CapEx spend, or, what if we have improvements? What if we have improvements algorithmically? What if we come out with more efficient chips? What if we're not going to build? We know there's massive pushback against data centers, and the stocks that actually are involved in the data center build haven't been doing well. So I think you want to really listen to those signals. This is nothing new. We've been talking about this for a month. What if there is a pullback and suddenly it's okay? IBM doesn't help. It's basically, IBM is suggesting a few things. Well, we're getting things wrong. We're not so sure about tech. And the way that I always frame things from a trading perspective is, a story can be strong, but if it's priced to perfection and you get a little bit of a fraction of that story, I think we're going to need memory for many, many years to come. But the problem is, the market prices things in. It prices full fear and greed on both ends of the spectrum.
Yeah. No, I mean, what you said, I laugh because what if we don't spend as much as we're going to spend? That comment right there literally would create a market crash. Like, the market would crash. We would have a Black Friday, a Black Monday, whatever. That's like saying, bomb inside of an airplane or inside of a crowded movie theater or something. Like, you don't even say that on TV here. People might,
you can't say bomb on an airplane. You can't say bomb on an airplane. What was that? That was a Ben Stiller line or something like that.
The whole idea is, the entire market is predicated on the fact that the AI spend build out is there. Again, it is a thing. And when you see Meta, I think the Meta is the very first kind of like, oh, wait a minute. Now they rallied on this. Remember, we talked about it that the day after they changed their tune of, we're gonna sell our excess. our excess compute. Well, what do you mean excess? Why do you have excess? Like we're in a land of not enough. Well, they have excess, which somehow, again, maybe their model sucks. They're not using their, you ever use their AI model? Even the people that work at Meta don't use the Meta AI model. Did you know about that one where they have a token contest inside the company, and they have a leaderboard, and they had to tell them to stop using Claude because they were using Claude tokens way more than their own internal tokens. And it was like, it's because their model sucks.
Yeah.
But no, I think, it's like, the idea of, so that, like, I like to bring it back to trading so you guys have something to look at here for the day. You might asking yourself, well, we had that big spike in the stocks overnight. Why is it fading? Like the S&P just turned red. I'm looking at the screen right now, and the VIX kind of came back up a bit. And the reality is, like, on a big CPI number, the machines, the algos, how you program it, if you were to program an algo to trade that number, you basically remove your offers in stocks because they're going to rally, and you try to buy whatever you can buy. And so there becomes like a vacuum of trading. And so you get these big spikes in the number. It's why on a spike for trading, I really, really don't like a big spike on one bar and then to try to play a follow through, because it's not the same as accumulation. I'll talk about a lot of this when my service comes out. It's going to come out. I'm going off next week. Right after when I get back, I'm working with the team here to get it out. But I'll talk at length about this kind of stuff. But one spike bar is not momentum. It is not a trend. It is not something. So it's something that you observe to try to see what the market does. We're rolling over here because there's two pieces, right? So you had Warsh come out really kind of hawkish at the same time, but also oil since then. So this big CPI number that came in, you got to remember that was when oil was priced at $70. That was 3 days ago. It's now 80. We've had this don't forget, there is this thing going on in Iran we're going to see this bleed back into CPI if oil stays higher. There isn't really much of a resolution that's going on over there right now. It looks like it's getting worse before it gets better. So that's sort of why we're getting the pullback here. Now, what I'm looking at the board, the financial sector is the strongest in the market right now. And that is based on these JP Morgan and Goldman Sachs and Morgan Stanley, Bank of America, Citigroup. They all had great earnings. And that's sort of like, that seems like a safe place to hide right now.
It is. And I think that's really what we've been saying is really you want to be shifting in an area where there are more questions, unfortunately, and fewer answers. And so you can kind of see the free cash flow. This is nothing new to folks. This is what the big tech companies, hyperscalers are spending. And it's rather concerning to investors. So I feel like the mags, unless they kind of flinch at some point, and I think that's the possibility. There's a possibility at some point that somebody flinches. Maybe Meta was just a little sign of that. But I'll agree with you. Their model it's like Copilot. Nobody cares, right? So, but eventually, I think what Zuckerberg might be thinking is that eventually, look, these things are going to converge, and I think he's going to put the pressure on OpenAI and Anthropic, because if these things are pretty good, well, Meta's got an ecosystem, Google's got an ecosystem. It's very clear. I mean, OpenAI, it could be screwed from a financial standpoint. Maybe it gets bailed out. Maybe they IPO at a lower price. Maybe they raise enough cash to make this work. But they're screwed. That is a terrible, terrible model. They are losing tons and tons of money, and now they're going to be in a pricing war. Now they're competing with open source, free models, Chinese models, and they are not going to make this work the way their financials are. So maybe Zuck is saying, okay, let's all put the pressure on these guys, because maybe we're not going to make money on our models, but we are going to divert people. If we can get people using them, then we can push them into our ecosystem, which is a monetizable ecosystem, right? So that's a very big difference between an OpenAI and a Meta or a Google or even a Microsoft. You've already got hundreds of millions of customers.
So what's interesting is that you saw they scrambled. Not only did they, they're cheating in a sense. They bought that arm from Johnny Ive. So Johnny Ive, designed that. How do you even do that? And they're like, So I think you said it yesterday or the day before. You called him Scam Altman. I think you said it yesterday or the day before. You called him Scam Altman, and I just thought that was so funny. But there's a lawsuit between Apple and OpenAI.
Because Somebody did this funny thing, Tim, yesterday. They took a Mr. Bean. I don't know if anybody remembers Mr. Bean, but he was this funny kind of like character, and he was. There was one scene, I remember the scene where he's kind of like trying to cheat. You know, there are two people are writing an exam. He's kind of cheating, but they've superimposed Sam Altman's face. So Sam Altman is kind of looking at Tim Cook's stuff. And then Tim Cook notices, and so Sam Altman's kind of like this, and he's like, oh, like, and then he's like, look over there, and then he's like writing it down. That really is what's happening. These people are really special people. And I believe they're going to be in panic mode because I don't think it's going to fly. I mean, the device might do okay, but you're not going to displace Apple. I mean, Apple's just going to do the same thing, right? So these people are really in a very difficult spot. And so what we're getting is really what we warned people about is this incredible tumble. And so what I want everyone to understand is that the IBM news is positive for memory because it shows you that people are buying like crazy. But at the same time, there's probably a lot of pantry stuffing going on. And we've had these incredible down days. And we warned people. We said, listen, this is not good. People are piling into these leverage ETFs, regular ETFs. Look at the margin loans outstanding. Well, guess what? A couple of reports yesterday saying that take this with a grain of salt, but some pretty good reports saying 1.2 million liquidations in Korea, 360,000 accounts completely wiped out. So that's 1 out of every 30 adults in South Korea has been liquidated today. Again, these are reports coming out of there. If it's half as bad, it's still really bad. This is the recipe for a mania. And I've been warning about this for 6 weeks, and we've been talking about it on every show. So I hope at Option Pit, it's not just about giving you good ideas, it's also about keeping you out of some pretty nasty avalanches once in a while. This just can't think of all the money that's piled into this. So it's not that the ideas are bad. Micron at 6 times earnings isn't bad. So I'm looking for a spot, but I've expected this FOMO to kind of unwind. And so I want to take that as an opportunity.
No, look, I'm a trader. I've been a trader. That's the only thing I've ever done. I've traded on the American Stock Exchange. I traded on the CBOE. I ran money. I raised the fund. I traded leverage, right? We ran $200 million and we levered that. We had investors who were levered 10x on something that we were levered on. I mean, we had people levered. But when you take somebody who has no idea what they're doing and you give them a levered position, it's going to end badly. It's going to end badly. I don't like the levered ETFs. I'm really not a fan because it allows people to get leverage that shouldn't have leverage. There's a reason I didn't realize because I grew up in the trading through the exchange. I was a member of the exchange. I spent 6 months or a year studying for this test to become a member. So I knew what it was on. I didn't realize when you open an account, a brokerage account, that you got level 1, level 2, level 3, level 4 to be able to do all these different trades. You know, the rigor that we had to go through just to be able to trade on the floor was pretty intense. So the thing is like, I'm glad those things are there because it protects people from their own selves because you get into stuff you don't understand. That's kind of what we're doing here at Option Pit is to try to bring some of these complicated ideas, some of these things that are leveraged to help you understand what it is that you're doing, when it's time to lever and when it's time to just back off and either walk away or have a regular position. But the fact that so many people are going to have these levered accounts, it also makes it hard for us as traders, as market participants to really track where the flows are because it's a little hard when you have 10 different versions of the NASDAQ. They've got a 3X, a 2X, a bear, a bull. Like what? It's frustrating. I don't like
it's nuts.
That's my rant.
It's a little nuts.
Sorry.
And so, Tim, I wanted to talk a little bit about, I agree. I mean, this is just, in this age of disruption, and we know that, well, actually, I just covered it up here, but if we look at, here, let me move this over. If we look at this is what you have to get used to, guys. We've been talking about this for a long time as well. Let me get rid of that. So you can see here that from an index standpoint, right? So some people might look at the VIX and say, well, it's not really doing anything. It's just kind of sort of sitting around 16. We hit 1503 on Friday. What is that telling you? Well, it tells you there's nothing to see here. But under the hood, I mentioned this to Garrett this morning. I said, look, under the hood, we are seeing some of the most extreme dispersion, meaning stocks just doing their own thing, up, down, all over the place. we haven't seen anything like this in a very long time, if ever, certainly on the option pricing standpoint. So think of the VIX, viewers. If the VIX is measuring, think of it simply as measuring, it's a fear gauge for the overall index, right? So where are we going to price protection on the S&P 500? Well, it's at 16, 15, 16 is not very excited. Sure, it can get lower, 12, 13, but I think those days are roughly over. This is a new world. But what's happening on the single stock fear gauge, right? So if I told you, well, what's the VIX on an individual name, on a Dell, on a Micron, on all these things that are moving around, well, those option prices compared to the index option prices are as the distance between those two is as wide as we've ever seen it, ever.
Yeah.
So under the hood, there is a massive amount of stuff going on. And IBM is just one more example of why that's happening, because you're getting thrown a curveball, right? The curveballs are all over the place. This is like, this is a pitcher who doesn't know anything but curveballs. And we are getting thrown curveballs left, right, and center. And analysts have no clue what's going on. They're getting everything wrong. They're Micron cyclical at 200. Now it's the greatest thing in the world at 1200. Trust me, these guys don't know any more than you and I do. And we know more than them probably because we're paying attention to the stuff that we talk to you about all the time. This is an age of disruption. So you've got to be in the right place. It's become a very kind of binary market. I look at ARM. It was hit 450. It's a semiconductor stock. It's down to 290, right? So even within a theme, you can see that there are going to be companies that execute and companies that don't execute. So even just being in a theme isn't a guarantee of success. You've got to pick the specific names within those themes. So it's a very, very treacherous market out there.
What's cool is, you see that thing is spreading out, right? So that the black line and the gold line are spread apart. You can actually pull a chart of that spread. I'm kind of a geek. I look at this stuff and I start to really drill down to what are you really looking at? I don't know if you can pull up a chart right now, but I think it's COR1M. I'll type it in the chat. That's, again, this is actually quite advanced. I traded this way for a few years. Really fun implied correlation. This is the implied correlation. So it's implied volatility of the index and then divided by the individual stocks. And so what that tells is that big spread there tells you what Hans was just saying there. That's at 5%. So that's saying that the index vol might be low. Even if it's 17, it could go lower. But you have individual stocks are so much higher than where the index vol is, and usually that's telling you there's not a lot of premium in the index itself. So if I wanted to go, I thought I was going to get a big, huge sustained rally. So I've been looking at the S&P and it's making this bull flag, right? A big bull flag in a daily chart. Technically a pennant because you have the upper part of the chart is going down and the lower part's coming up. But I've been looking for a breakout in that pennant. And if we had a higher implied correlation, meaning there's a bit more premium or juice in the index, I would expect a big rally out of the stocks. And that's the only thing keeping me out from being absolutely bonkers bananas long is the fact that we don't have a huge amount of premium to come out. I'm looking for some kind of premium to be able to come out of the market to get that squeeze rally. And I'm not seeing it.
The individual name, I think the individual name opportunities. So in Turbo Income, we're looking at this and we're going, wow, there's a lot of single name options that are very, very expensive. There's opportunity there. You've got to be a little bit careful. But really, this is kind of the world we're going to be in. And the MAG is actually kind of an interesting place because if there's a cutback on CapEx, they are going to benefit from that. But the infrastructure, the build out area will just get absolutely demolished. Like it's just not going to be, and you won't even believe how bad that could get. So because that could be just the first shoe to drop, right? If somebody says, well, we're not going to spend ourselves to death. So there's really this balance, which really kind of speaks to what we talked about a moment ago. Well, if we get another shoe to drop, like an IBM or much bigger, then there's just going to be this rotation again. And that's what people have been doing out of semiconductors. Every day that happens, you see the software names rally. And then, you see people kind of push back into MAG because they're a little bit of safety and balance sheet strength. And maybe they're hopeful they cut back on spending. So it's really just very much a trader's market right now. I see it as a kind of singles and doubles kind of market, if you want to go out there. and everything's kind of murky, right? You look at oil. Well, oil, good inflation numbers because things are getting cheaper at the pump. But guess what's happening out there? We're oh yeah, what was I going to show? I know we don't have that much time left, but this is an interesting one, Tim. We may have shown this one before.
Oh, I love this chart. Yes, I think it's the oil and the inflation chart.
Yeah,
right.
Exactly.
Yeah.
The oil and the
yeah. So this is going to be
a
chart. I can see your screen. You're showing some on Google. You got to show some other screen. I'll talk about it here for a second because I think I know what it is. You had oil come from $100 down to 70, but we didn't really see much change in overall inflation.
Right.
The bonds didn't really respond. Right.
Right. So let me get rid of this guy here. Okay. So here, this is it, right? So the energy shock, so it may not be over, right? So it's quite possible. I think energy is actually an interesting place to be, XOM, XLE. So we got a little bit of a rally going on, but look what was happening already. We had energy come down and 2-year yields not really caring. Now, there are other things that play into that, but I believe that we have a kind of a two, as we do in many things with the K-shaped market, K-shaped society, K-shaped economy. It's about AI kind of keeping a lot of inputs very expensive, and labor, right? The labor. I mean, you could make hundreds of thousands of dollars a year, not doing. Although I did see there was somebody said today you could work at Wendy's and make a couple $100,000, which I don't believe, but maybe they're having trouble getting those people.
Oh.
But anyway, the whole point is that this is good for consumers, right? So this is going to make people happy. This is going to get sentiment. This is going to have sentiment start to come back, which has been terrible out there. So, it's cheaper at the pump, but we'll see what happens to oil. But at the same time, you do have this sticky inflation. So I think Warsh is still going to be like, let's really be careful here. And that's playing into everything. Look what IBM said. They're piling into memory. They're piling into servers and other things. Well, that relates back to what Apple said a few weeks ago, which is, hey, we're going to have to raise prices. So there is inflation, but only in certain areas. I think wage deflation is very much going to be a thing in other areas, maybe not in AI specific. So it's very K-shaped, right? There's a whole bunch of stuff going on, and that just further pushes us into an age of disruption.
I didn't mean to be distracted here, but the stocks are ripping and stuff's moving around right now. Warsh is on the tape. Everybody, if you're looking at your screen, and I'm just like, what? So you caught me. I'm like, wait, what's going on? Oh, so he's out talking, and it's more of his, more of his commentary there. But yes, no, I think this is one of those things. Back to your point, it gets to look, watch the indexes, but I think there's a little bit more in the individual names. That's where I'm at. That's what I'm looking at. I do think, again, this is a total sidebar. It's just on my board. It's on something I'm thinking about, not anything we talked about. But I think gold is done going down, at least for a little bit. I think just like leaving the dollar being long, I'm no longer bearish gold. I had been bearish for quite some time here.
Yeah.
Coming out through the war. If it couldn't rally through the war, dude, it's not going up. I think I'm going to have gold on my radar for some sort of turn to take a poke at it to the upside GLD. It just looks like it's basing. It feels like it's done going down. Totally sidebar. Again, just putting it out there because I had to say it because it was on my mind. So
I like that.
Anyway,
Tim. Well, I think we're really up against it here. So I think, you just want to kind of, I think the whole sort of build out memory area is a little bit challenged here. I don't think the game is over, but I think it's challenged. You can see that people are piling into the things that we've been talking about, which is, the servers, the equipment. People are going to need more equipment. People are going to want, to own the data companies like Datadog and Snow hitting almost all-time highs. So those are the ones I've been pushing. Who are the beneficiaries of infinite, of insatiable compute demand, even if it's cheap? Well, the people who deal with that next stage, right? It's not so much the people who sell the chips necessarily. It's the people who are going to manage this infinite amount of data storage, right? So, the SanDisk, the WDC, things like that. So I think that's where you want to be very, very careful, guys. when you're trying to, in my view, what I've been telling students, I've been saying, listen, be careful. There are a lot of ugly charts out there and you're tempted to pick the bottom, but really I'm trying to position in things that have the right stories, not necessarily buying things that don't have the right story, but just have sold off hard. Guess what? Those can sell off more. Oracle, I've been adding to my shorts and it looks like it's going to $100. They're bad stories out there and I'm not relenting on some of those.
One thing to pull up again, I'm just going to throw we're 7 minutes over, so I don't gotta go anywhere. I'm sitting in front of my desk all day. But I wanted to pull one up because I have it written on my table. XRT. So XRT has a gorgeous pattern of a breakout potential to the upside. Yesterday, it was like really excited because it took out a bunch of highs. There's no story. So again, this is getting onto stories. I'm trying to get away from this whole semiconductor stuff because I do think there's going to be other stuff to do. But you get a few day rally above that high and oh my God, there is all kinds of stuff that could go rallying with retail. Like I think that's got a great breakout. Now, could it break down and go back in the box and be a chop fest again? Sure. That's why I'm not long it now. I want to see some rallying out of there. But I mean, that hasn't moved in a year. Like there's other stuff that can go on in the market. Like we had an IBB rally, so look at IBB, pull up IBB and pull up XBI.
XLV having a pullback.
That run?
Kind of surprised. Oh, IBB. Let's take a look here.
Yeah, IBB, XBI, like that had. So that's the kind of chart that I'm talking about. XRT. It's going to do one of those. I had watched IBB for like 3 months, and finally it broke out, and we got a big move. So I think you look for those type of things to try to find where the story is going to be next. That's what I'm doing. I bought a pullback in XBI. I'm sitting right here. This is around sort of the momentum type trade that I'll be doing in my service. I don't really do this one particular ETF, but I'm in
amazing,
here.
Tim. We're looking forward to it. What's the service called? Tell everybody what the service is going to be called.
We don't know yet. I don't have a name. I'm open for some suggestions. We got a lot of chatty Cathys in the chat. We'll go over it. But it's basically a momentum service. You're looking for stuff. You're looking for stuff that's kind of had a run and coming back. That's kind of phase 2 of a run, of a momentum run. The phase 1 that we're not going to maybe launch is the breakouts because the track record on those are really lumpy. They're in the sub. Those are the 30% winners, but they pay a huge amount. But I like to see defined rallies for the service. But my point with this one is that move that we saw in IBB is something I think we can see in XRT. But I'm not getting involved until we get a breakout, and I think that's something we can see maybe in the S&P if it breaks above this channel.
Yeah, I think the levels to watch, guys, are QQQ at 700. So if we hold, that means things aren't deteriorating in a significant way, which in the sort of build out area, which means we won't get a contagion, right? That's the only risk, is that the rotation is orderly until it isn't, right? So if that gets ugly, which I think there's only maybe a 15%, 10% chance of that, I think it's something to watch, right? We want to continue to see how Korea unravels a little bit and how that whole trade unravels. But in the meantime, as long as we're above 700 on the Qs, I think it continues to be that rotation, which is what Tim's talking about, which is, hey, listen, where are we going to put our money? People don't take the money out in a rotation. They reallocate, they redeploy somewhere else. And that's what you want to do. You want to look for that next opportunity, at least until these things get a little interesting.
I do think we can see a run out of the Qs. I said this yesterday on Ticker Highlight Show. If we get something like a NVIDIA to go back up, or we get something, those mags, if they go from lags back to mags, the Qs are going up to 760. It'll be very fast, but it's going to take new leadership, and I think that's kind of what we're talking about. So anyway, a little bit over. We're a little bit over.
Way over. Oh, Hannah's going to kill us. Okay, everybody, thanks for watching. Have a great day. I hope you all trade safe and enjoy the rest of your day. And we shall see you tomorrow morning. State of the market. Do not miss it.
Mark will be back. Thanks a lot, guys. Love you.
Thanks, everyone. Thanks, Amin.